Good morning. My very proud greetings to all of you ahead of Republic Day tomorrow. I'm pleased to share with you our Q3 earnings and our year-to-date earnings for fiscal FY18. Let me start by saying that we've had some significant developments this quarter, which have already been shared with you. The first being the US FDA approval for our biosimilar trastuzumab asset, which we have partnered with Mylan. This is certainly a big milestone for the two companies, as it is the first biosimilar trastuzumab to be given accorded approval by US FDA. The second big milestone announcement that we made was our strategic partnership with Sandoz for developing the next wave of biosimilar products for global markets. Now coming to numbers, this quarter we have basically delivered a top line of 1092 crores, and if you look at the operational numbers, these are at 1058 crores. This is a pretty flat performance when it comes to both Q3 and our 9-month reported numbers. Having said that, last year we have also had the benefit of very large licensing income which did not flow through this year. So at a PAT level we have seen a significant decline in our profit after tax. This year we reported 92 crores. As compared to last year, where we had the benefit of a large licensing income that we had with respect to our biosimilar trastuzumab asset that we licensed with a Brazilian company, Lips Pharma, and that actually boosted our profit numbers to 171 crores last fiscal. Now when you look at EBITDA, this has also declined significantly compared to last year. It is now at 256 crores. And if you look at our EBITDA margins, although the EBITDA margins are at 22%, if you look at core EBITDA margins, which is net of licensing income, forex and R&D, it is at 27%. And at a 9-year level, it is at 28%. So, if you look at our R&D spends, again we have registered R&D spends of 94 crores at a gross level, and at a P&L level, it is 53 crores because we have a capitalized 41 crores based on our various biologics program. Compared to last year, of course, we have seen a decline in R&D spends, but that is not indicative of what the future holds for R&D investments. I do believe that R&D is a very integral part of our business, and increased R&D spends actually are reflective of the advancement of various programs. Of course, in terms of R&D spends, these are going to be lumpy because many of our programs have basically advanced in the clinic. Many of them have completed their clinical programs, such as trastuzumab, such as pegfilgrastim, even our glargine development for the European markets has also been completed. So you're likely to see a fluctuation in R&D spends, but I think we have shared that our R&D spends between our biosimilars and novel biologics will basically be in the range of about 450 to 500 crores on an annualized basis. In terms of our segmental performance, we have seen strong headwinds in our small molecules performance, where we have seen a decline in revenues for small molecules. Having said that, we are seeing that the small molecules vertical, although it has delivered 369 crores as compared to the previous year, which has shown a 9% decline, we have seen some channel consolidation, some price commoditization, which has impacted some of these API sales. Having said that, we have also entered the US market with some of our finished formulation generics such as rosuvastatin and hopefully soon simvastatin, and these are expected to bolster some of our small molecules number going forward. We do expect our small molecules business to recover sharply from next fiscal onwards, and we have a pipeline of products that we believe will actually accelerate growth in small molecules. Biologics has also seen a decline in its performance, largely attributable to the requalification activities that we had to undertake in terms of the re-inspection required by EMA, and this certainly has given us a bit of a setback, but now we are over those requalification activities, and we again expect now in Q4 onwards our biologics business to revive and show some strong growth thereafter. In terms of our branded formulations business, we have seen growth this quarter and for the 9 months, which is really led by our UAE business, which has shown some very, very good promising growth. We have also seen the approval of our biosimilar insulin glargine in the UAE market, and we have just entered that market with our own branded product, and we expect to make some inroads into that market. We have also seen the approval of our insulin glargine in Russia. We expect that also to basically translate into a good opportunity for Biocon in the biosimilar insulin space. As you know, we've also received ANVISA approval as the first biosimilar trastuzumab in Brazil. That will also start garnering business for us starting Q4 of this fiscal. So whilst we have had certain headwinds that we've had to face this fiscal, we believe the worst is behind us. We believe that these headwinds are beginning to ease in many of our segments. Some of the segments like small molecules will continue to have to face a few challenges, but we believe that come next fiscal, you will see a much more confident performance by all our segments. We hope that with more regulatory approvals expected over the next 12 months from various agencies, that all our businesses will show a sharp recovery. So I will end there, and I will also mention that our research services business has had a very strong showing this quarter. It has certainly indicated that it is on a sharp recovery mode, and we believe that it will have a good strong double-digit growth this fiscal and beyond. Certainly we've seen a 17% uptick in Syngene's performance this quarter, and we expect it to end the year with certainly a good annualized double-digit growth. The focus for Syngene moving ahead is certainly going to be biologics, and many of its service offerings and its anchor clients are beginning to expand their activity at Syngene. BMS just announced a renewal of its long-term contract with Syngene to 2026. We've seen Amgen also have a strong expansion in its activities at Syngene. It is looking at enrolling more large marquee clients in the same kind of format. So I think going forward, I think Syngene is in a good spot. to deliver good, reliable, sustainable growth.